let's talk about the Fed. It's our top story. President Trump blasted the Federal Reserve again this morning, calling on the central bank to cut interest rates to zero, even set negative rates. Joining us now from Washington is Yahoo Finance's Jessica Smith with more details for us. Jess?
Adam, we've heard the president attack the Fed before, but he's really taking it to a whole new level with the tweets this morning. Let's look at those tweets. He said that the Federal Reserve should get our interest rates down to zero or less, and we should then start to refinance our debt. Interest costs could be brought way down while at the same time substantially lengthening the term. We have the great currency, power, and balance sheet. The USA should always be paying the lowest rate. No inflation, he says. It is the not only the naivete of Jay Powell and the Federal Reserve that doesn't allow us to do what other countries are already doing, a once-in-a-lifetime opportunity that we are missing because of boneheads. Now, the president is potentially here calling for negative rates and to refinance the national debt. The president has long attacked the Fed, even calling for a full percentage point cut. But this is the first time he's called for negative rates. That's a move other central banks around the world have used, but it's been controversial. It hurts savers and hurts banks' earnings. Supporters, though, have argued that it could weaken a country's currency and help boost their exports. Of course, the president always focused on the trade deficit. And the second part of that tweet, refinancing the national debt, it's not quite clear how the president thinks that would work, but the national debt up to more than $22 trillion, nearly $17 trillion of that publicly held. And one interesting note, Stephen Moore, who the president had planned to nominate for the Fed, had written an op-ed just a few days ago calling on the Trump administration to refinance the national debt, but lacking details here and how the president thinks that could work.
Okay, we are joined by today's panel, LendingTree Chief Economist Tendai Kapfitze and Yahoo Finance's Emily McCormick. Also joining us is MFS Investment Management Global Investment Strategist Rob Almeida. Rob, it's good to see you again. Do you come, when you hear these tweets from the president, do they go in one ear and out the other ear? I mean, what do you say to your clients about how to make an investment decision when you get the president doing these kinds of things?
Well, what I say to my clients is the same thing that I say to my kids, which is let's focus on what's material. And what's material, at least as it pertains to financial market returns, are cash flow. So when I think about what's the right level of interest rates, to me what matters most is what does the market think of it? And so the level of a sovereign bond yield should be the market's reflection or discounting of what it thinks economic growth plus inflation may be. So I really care more about fundamentals.
Well, and the markets today are not talking about negative interest rates. In other words, we've got the 10-year yield at 1.73%. It's moving up. So it seems like that at least in the short term, we're not seeing people trade on this headline.
Yeah, I think short-term markets do what they do. What just really matters, though, is over the long term. And I think what we've seen over the last 5, 6, 7 years, maybe 9, 10, 11 years, that we've thrown a tremendous amount of capital at the system, and all we have is sub 2% inflation. And I think the source of it versus the symptom is what's more important. And the source, I think, largely is the internet has oversupplied the market. It's created product quality transparency and pricing transparency. So we have price wars in sectors and industries all over the world. And I think this is the source of the disinflationary backdrop. And I'm not sure what short rates by the Federal Reserve can do to fix that.
That's an excellent point. This is Tendai Kapfitze with LendingTree. It seems that there are different things getting mixed up here. Does the government borrow at the Fed funds rate?
No, I mean, ultimately the government's borrowing at what the market deems the yield curve should be. And so that's what's material. That's what matters. What does the market think?
So if the market right now is telling us, I'm just going to look at the longer term, the 10-year is going up. We're setting up for another cut next week. And I've had guests come in here who are telling all of us we're going to see 4, maybe even 5 total over the next year and a half, 2 years. How do you catch your breath? I mean, it would seem to me that the market's saying one thing, but the analysts are saying another.
Yeah, I think, and we've seen multiple episodes in the past and more recently where expectations were wrong, analyst expectations were wrong, Fed speak has changed, and that was wrong. So I think at the end of the day, what's material is what will cash flows be, what will the real economy be, what is the buying power of the consumer base, and ultimately how does that manifest in inflation. I think if we look at other signals, so we're focused on the shape of the yield curve as a signal for entering a recession or not, but if you look at the performance of stocks over the last 5, 6, 7 years, specifically growth stocks, outperformance over value stock, that I think is signaling something too. It's signaling that we're in a low interest rate environment. Now, I don't know what level we're supposed to be at, 2%,
right,
something lower, 1.5%, 1. I'm not really sure.
Very quickly, there was a lot of talk about this rotation out of the momentum stocks into more value stocks. You just brought this up. Do you expect that to continue over the next 6 months to the next year?
It's hard to say. I think specifically as it pertains to growth versus value, as an industry, I think we've overprescribed and overvalue labels. So whether something's a growth stock or a value stock, there's third-party agencies that dictate that. At least to me, and how we think about investing here at MFS and what we tell our clients is whether something's growth or value, whether it's large or small, whether it's U.S. or non-U.S., what do they do and how do they do it? Do they have margin durability? Do they have margin sustainability? If they do, they're probably going to have cash flows. They're probably going to be profitable, and they're going to be good stocks regardless of what they're called.
All right. MFS Investment Management Global Investment Strategist Rob Almeida, good to see you. And just a reminder, your company has, almost $500 billion assets under management. So we listen to what you have to say. All the best to you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.